Let's talk about the technical analysis limitations. So, what are the limitations of the technical analysis, and what factors beyond the chart should be considered when making investment decision, Abhi?
So, in my opinion, technical analysis takes a long time to learn. I might say that, this is how you read a trend, but it it not just the learning aspect of it, but it is the constant application. And whenever you go back and you're proven wrong, you go back and study the market to see why did you have a wrong opinion? Was it because you saw something that never existed, or there's a new rule that needs to be added to your analysis technique? So it's a constant update of your rule system, and it takes time to learn. And the trends and things happen in multiple levels. So the next level is you understanding there are multiple trends, there are conflicting trends, multiple things happening at the same time. So you need to be wary of that. And third thing, I just mentioned, um, there are traps that the institution set up.
Mhm.
Um, you need to be wary of that. It takes time to, like, whenever it's like so obvious, like, oh, it's definitely going down, and you see everybody jumping on the shots, that it's because if everybody is selling, nobody's going to be buying, right? So the ideal thing is the institution sell it and a retail buyer buys it at a very high price, not at a low price. So when you see that happening, you know that there's a bottom coming up. Because if there's no buyers to sell it to, they'll be like, okay, I can't sell it to anybody, but all these people are selling it at a lower price. Let me buy it from them and drive the price higher and sell it back to them at a higher price.
Mhm.
And you'll see that being done every day, during the day, during the week, during the month, that always happens. So you should be able to recognize that pattern and know when have proper rules for your entry and exit.
Got it. Got it. Yeah. So, any specific, what is your specific experience in analyzing stocks within this, any specific sector or industry, Abhi?
I since I'm a purely a technical analyst, a lot of times I buy stocks that I don't know what they do. I don't know what industry they are in. I don't know what sector they are in. I purely look at, for example, I recently bought this company, ABR. I don't know what they do, but I know that, if I look at the daily chart, like this is where I bought and I'm still holding on to this. I took, this is where I bought and I sold some here and I still have half the position left. So I don't know what they do. Looks like they are some realty company, but I know the chart patterns. And I've looked at charts for the last 10 years, let's say even 30 minutes a day. There are times where, it's an understatement, but I've done this for so long. That's how, again, I'm not saying that, I'm the best or I know all the chart patterns, but, the more and more you look at it, you get used to those patterns. You see these common recurring patterns that you want to take advantage of.
Got
So
it.
that's how I trade. So when it comes to futures or any stocks, um, as long as it's not a thinly traded stock and it's not a stock that could be easily manipulated by a lot of people, I'd go and buy it purely from a technical analysis standpoint.
Got it. Got it. Yeah. So we talked about the technical analysis and as well as the fundamental analysis, and as well as we talked about that historical patterns, right? So going beyond the chart, right? Fundamental analysis integrations, right? How do you integrate fundamental analysis with the technical analysis to get more comprehensive picture of the stock?
Yeah, that's something that I want to invest more time in the future to understand the fundamental analysis aspect of it. Right now, I do not I don't do much fundamental analysis. I know at a very high level of, how to look at EPS and what sector they are in, top performers in that sector, that, all those things that I look at, but I don't apply any of that to my trading.
Okay.
I
Okay.
just take the usual suspects that everybody likes and loves, and I just trade those. And I probably trade a handful of stocks. That's about it.
Got it. Got it, Abhi. Abhi, that sentiment, market sentiment play a vital role, right? Like economic
Yes.
news, investor psychology, right? So
Yeah.
how can current market sentiment be incorporated into the technical analysis?
So technical analysis, by definition, since it's a supply and demand, it has greed and fear built into it. So when, let's look at SPY during 2020, right?
Mm-hmm.
So at this point, you can see a sharp, steep drop, right? This is clearly what fear looks like in the market. So you see, this is the swing low, here's the swing low, here's the swing low, here's the swing low, and then suddenly the market dropped. It takes out one swing low, two swing low, three swing low, four swing lows. It keeps on taking it. This is fear.
Mm-hmm.
And this is where people are like, I don't know what's going to happen to the world. We might not, be in a civilization anymore. Everybody's like, uh, you know, dying around. And then the media overpowers on the news, and then you think that the whole world is coming to an end, which was kind of 2020 for a lot of people, right?
Mm-hmm.
So this is fear. At this point, like there is no way, if you can join, go down, great. But if you are very new and not, um, you don't want to be in that highly volatile environment, it's okay to disengage and remain in cash. That's fine. That's absolutely fine. And you have to use your judgment based on um, your risk tolerance and your appetite for risk, right?
Got it.
Um, by definition, in the technical analysis world, it is it has the human emotion involved in it. It's based on supply and demand, but that supply and demand is driven by fear and greed all the time.
Understood.
When price in 2021, I
Mm-hmm.
can show you greed was involved. So this is at the end of 2022. Where is it? Yeah. So, you know, this is where COVID dropped
Mm-hmm.
out. And then this is where all the government money coming in, and everybody's buying stocks. Like whatever you buy, the next day, it goes up in value, it goes up in value, it goes up in value, it
Wow.
goes up.
Okay.
Like
Mm.
this is the representation of greed. There is
Mm.
like no inherent value added. There is nothing in the market to say our economy is thriving. There is nothing, right? We're still in lockdown. We're still, using hand sanitizers. We're still doing DoorDash for our food and not going out anywhere. But the stock market is not a representation. This is Fed going and printing money and saying that buy all the stocks, buy all the stocks, buy all the stocks, and give away money for free. This is the classic example of greed from here to here. At some point, the greed is going to trap you, right? And
Mm-hmm.
this is the 2022 first time, it takes it out. It takes it out. Now the market has to consolidate. It has to, like people whoever bought here and here, they're still in green. But people who got like late in the game, they were like so scared, so scared. I don't know what's going to happen to the market. Then they're looking at all the fear of missing out comes in. Like, oh my God, SPY was at close to $200. Now it's like doubled at $400. It's going to go to $800. I have to get in at least right now. They bought the billet and somebody bought here at $478.
Mm-hmm.
You could always see people like, as soon as I buy, the market drops. Like they're the
Yeah.
ones who bought after a huge rally, after everybody bought it. Like
Yeah.
here at this point, pretty much the institutions know, like, okay, this is not sustainable. They'll
Mm-hmm.
slowly start dispersing all the stocks. They'll slowly start dispersing all the stocks. You or I, as a retail trader, we can't move the market, right?
Mm-hmm.
If I buy one share, it's not going to move.
Yeah.
But if JP Morgan comes and says that dump 5 million shares of SPY, it's going to go down.
Yeah. Yeah. Agree.
And retail investors might buy. wow, it's, we are going to the moon and they'll buy 2 million shares of it. And then there's 3 million shares that are sitting without any buyer. It's going to tank.
Yeah, agree.
So the charts, in my opinion, the charts have everything that you need to make a decision. It's your responsibility to learn to read that, to learn to read where the battlefield is, who's buying where the fear is, where the greed is. It's okay to be greedy. In financial world, one of my mentors used to say it is okay to be greedy, but don't be a pig about it,
Hmm.
right?
Yeah,
So that's, I use that as a guideline. It's, will I not buy it here? I'll buy it here, but I'll have like very tight stops. If markets don't go my way, it doesn't keep on going, I'm out. Buying here means that I've left all these profit potential and I'm trying to buy it here. That's always dangerous.
yeah, agree, Abhi. So discipline and adopting best practice is the key, right?
Yeah.
Uh,
So my core, I think this is, probably are there more questions?
yeah, there's a few more, Abhi.
Okay. So, let's go through those questions and at the end, I'll leave with what I have to say.
Sure, definitely. Yeah. So let's talk about for the liquidity perspective, right? Liquidity considerations.
Mhm.
So what is the talks, trading volume, and liquidity, and how might they impact entry and exit strategy?
Yeah, I keep it like really, really simple. If
Mm-hmm.
I'm dating any stock, it needs to have at least to 1 million shares of average daily volume. And if I'm doing swing trading, it has to have at least 500,000 average daily volume. That's all the two rules. I keep it really, really simple. Once I choose them and I put them in my scanner, I don't have to go back and constantly revisit that rule. If I'm seeing it, I know that all those stocks follow my rules. That's like, I don't even, if you look at my chart, I don't even have volume bars on my chart. I don't use volume. And when it comes to futures, um, I do not trade illiquid futures. I don't trade ags or softs or pork bellies or things like that. I just stick to the popular ones like NASDAQ, all the equities, gold, oil, So I know that they have very, very high volume, so I don't have to worry about anything else.
Great,
So
great.
that's how I use.
Okay. So let's talk about the tools, Abhi. What is your recommendations, right? So what are the tools you recommend for the
Mhm.
beginners or advanced investors, right? So do you have any recommendations based on your experience?
Um, I try a lot of tools. Every 2 to 3 years, there's a new set of tool that comes in the market. We try that. I think from a platform standpoint, TradingView, in my opinion, is the best tool for analysis. Like 4 or 5 years ago, if you had asked me what is the best tool, I would have said Thinkorswim because they offered a lot of things that I wanted. But I feel like TradingView is a much better platform. Um, and I do all my analysis on TradingView. Um, and it's just a platform, it's just a tool. At the end of the day, you have to have a solid rule set. Um, tools are always as good as the person wielding it. If you take a sword, a katana at a trained person is definitely different from an untrained person. So katana is a tool, but how we use it defines our trading path and our trading career. So we should be disciplined, have a solid rule set, and constantly backtest and refine our rules to see what works and what doesn't. Things that work today is not guaranteed to work tomorrow. So you constantly monitor your progress. That's where Tradelytics comes into play as well, for us to continue to keep a tab on your strategies or setups to say, this strategy performed really well 2 years ago, but right now it's not doing well. So for us to understand that, um, that's one of the goals for Tradelytics. Have some automated systems to identify patterns and see where you can improve and opportunities for growth.
Okay, got it. Great. So let's talk about that Tradelytics AI perspective, Abhi. So what you're trying to solve the problem, right? So you have that some problem is right. So how that Tradelytics is going to solve the problem, Abhi? Could you please elaborate on that?
Yeah, so Tradelytics right now, the way that we see it is a lot of people get into trading without having the fundamentals of trading. Our goal is to educate. If you look at our motto, it's about how you plan, how you trade, how you level up, you're increasing your trading skills. So it all starts with a plan. If you do not have a trade plan, if you don't have your trade rules, it's very difficult to say what worked and what didn't. So for example, it's like, okay, I don't have a basketball hoop. I want to see how good of a basketball player I am. Like until there's a hoop and until you shoot, there's nowhere for us to correct, like, hey, you're 12 degrees off, off target, or you're like, overshooting or you're undershooting. There's no way for us to tell that. So first you have a plan. And then, we help you analyze your data first. As an MVP, it's about descriptive analytics. So we give you all kinds of splice and dice the data to look at different perspectives, like what time frame is working for you, what kind of style is working for you, what kind of setup is working for you. If you're good at any particular instrument, we'll identify that. So all those things. But eventually our goal is to go from a descriptive analytics to prescriptive analytics, to say where you can improve your performance, what you can do to drop your bottom 20% worst performers and invest more, or take more of the top 20% performers. That's our goal. So Tradelytics is a analytics platform, descriptive, which also helps you to your writing your rules, setting goals, and following through with your goals and becoming a better trader.
Great.
That's what I mean.
Okay, great. So I think you are going to integrate AI also, right, Abhi, in the later stage. Could you please elaborate on that, how it's going to help for end user perspective?
So there's two, when we say AI, a lot of people think it's Gen AI. So one is Gen AI, but the other is also the machine learning, good old statistics, to do identify, like, do some kind of Monte Carlo analysis to identify how you can make your trades better. That's the machine learning side of it and the data science side of it. And then the generative AI is you being able to ask questions like, hey, what's working, what's not working? Which of my trades are doing well, or um, saying which time we offer you standard reports, but if you want to go beyond the standard reports and ask, if I took this particular strategy in this particular time, how do I expect my expectancy to work? So things of that nature. So we'll make sure that our goal, our aspiration is to make sure, take the user query and convert it into a report and give them the visualization of the data, of their trading data.
Great. Thank you so much, Abhi. Thank you so much. Really very useful. You shared a lot of best practices and how to go for it and what are the discipline we have to follow. Thank you so much. So anything else would you like to share with us, Abhi?
Yeah, absolutely. I would say trading or investing is a zero-sum game, which means that it's always a transfer of money from one account to another. Um, it's not like it's an unlimited money potential. Yes, it is. But it's not that everybody's going to make unlimited money. So somebody has to lose money for you to make money, or you have to lose money for somebody else to make money. Clearly understand that. So, which means that everybody is incentivized to fake and trap the other person to take the money away from them. That's what institutions do. That's what they paid at. That's why every trader in those big trading institutions are given a 7-figure bonus to take money from small guys. So know that, understand that, be aware of that. And then focus, when you come to your trading, focus on your rules, have a standard set of rules, be disciplined and stick to your rules, stick to your risk management, stick to your position sizing, and follow your rules. That's what's going to get you, make you a better trader. If losing money is scary, reduce the risk. If losing $100 is scary, if losing $100 10 times in a row is scary, go do $10 of risk. And then it's like, losing $10 10 times, which is $100. That's fine. You're learning right now. So tweak your risk tolerance. It's okay to go like really, really low risk. If you're trying to learn trading, go $10. That's fine. That's absolutely fine. So risk management, trade management, and your rules, trade plan. That's what I would recommend.
Great. So proper planning is the key, right? For that risk level is the another important factor we have to take into consideration, right? Yeah. So thank you so much, Abhi. Really appreciate your time and sharing your experience with us. I hope this session is very useful. So thanks a lot. If anyone have any questions for Abhi, please reach out kwbconnect@gmail.com so that people get in touch. So if you are interested, probably we will get another session with Abhi and we will talk a little bit more deep into that any specific topic. Okay. Thank you so much, Abhi. Really appreciate your time and have a great evening. Thank you, Abhi. Thank you.
All right. Have a good one. Bye.
Thank you.